Hello and welcome to Macro Mondays here on Landy's Crypto Corner. Today is March 31st, 2025. And while it's still the 31st for me, Bitcoin has entered the second quarter session. Of course, it is April for Bitcoin right now. And that also means that it's Tuesday for Bitcoin. Although it's Monday for me when I'm recording this, the Monday session did just close about 20 minutes ago. And we're looking at a linear scale price chart for Bitcoin on the quarterly time frame because it's just it's much more apt to be looking at this just absolute explosion in price action for Bitcoin since its inception, really. So today we're going to focus on Bitcoin. We might peek at traditional markets. Not sure. Maybe I'll do that towards the end of the week after the full week of the new quarter is kind of behind us in terms of trading session for traditional markets. That'll also give us a chance to evaluate what happens on Liberation Day that is being touted over here in the United States by one President Donald Trump. So let's get into this. We're going to turn this back on log scale. I think it's just much cleaner, but this is really looking at the chart in linear scale is really something to behold when looking at Bitcoin price action. It's not often that you see the birth of an asset, just come to fruition with such volatility. And of course, many would argue lower volatility at this point, but when we put on log scale, we get a little bit of context here, in that the volatility has been compressing throughout the quarterly time frame for Bitcoin since its inception. It started off with a big old bang, and then as things have kind of progressed, we've seen less and less returns to the upside from the bear market bottoms. And, many expect that to continue for a while. And I would argue that Bitcoin is in a consolidation as we throw on the Bollinger Band set here on log scale. I would argue that Bitcoin is in a consolidation structure in the macro timeframes. And I pointed this out on Friday. And, no one can tell you really how long this is going to go for, but since Bollinger Bands started to populate, which is requires the basis band, which is the 20 simple moving average, where it's looking at the previous 20 candles to kind of get that 20 simple calculation from. Since its inception, we've seen the compression through from the 2013 highs into the 15 and into 16 lows. Where we got the explosive move up in 2017. And one of the easiest ways to look at this in terms of compression to expansion is we had price compression or mean reversion back to the basis here, and then an explosion above the upper second, upper third standard deviations for price action. And what's really telling is the lower first drops right off the screen. We then saw the 2017 high come in. We get the 18 into 2020 lows. We saw the compression, and you can note this very easily without even having to look at the top by watching that lower first standard deviation of the Bollinger Band start to come up. So one standard deviation away, we're in a compression phase. We get that explosive move to the upside above the upper second and third. We, of course, got a close open up there that put in the first high on an all-time high basis and the closing high on a quarterly basis up there. You saw the Bollinger Band's lower first drop right off the map there. And now we have yet to see this occur for the current bull cycle and the current bull market. Now we have seen the bull run, and that does not mean that the bull run is over, but we've seen the bulls run above the prior cycle high of $69,000. It did try to get started here all the way back in January of 2024 in terms of the quarterly. So the January opening candle here into the April candle there. So right into the halving is just before the halving, rather, Bitcoin put in a new all-time high, but did not hit the bull run, came back down to the upper first, proceeded to make a brand new higher high, from October into January of 2025 on a swing basis, and is in danger of putting in an actual high when looking at the quarterly here. Now, how would it put in a high? That would be on closes below the first quarter of 2025's low here at 76,702 on index here for the index price. Now, that would put in a closing high. Can price trade lower? Yes. What I will say is I don't necessarily want to see closures, and excuse the kids playing in the background there. I do not want to see closures in the second quarter occur under 76,702.93 on index here. And, there is a few things to note here when in a compression phase still on the quarterly here. How do we come out of it into expansion? Closes and close over close, meaning 2 green closes above the upper second standard deviation should do it for the Bollinger Band set, but even better be closing above that upper third, which is about 116,300 right now. Upper second is at 92, just shy of 92,700. Sorry, that's actually an important daily level that we'll take a look at in a little bit here. And then the upper first has now moved to, the prior cycle high right here at $69,000. So what could this turn into? Well, it could kind of go either way from the quarterly perspective. I don't necessarily see it coming back down to the basis. At least if it were to occur, I don't see it occurring this quarter, although weirder things have happened. That would be taking out this quarterly higher low swing here at $49,000. That would also put it well below Bitcoin's electrical cost. And that's just factoring essentially electrical cost to produce Bitcoin in Bitcoin dollar terms, which is sitting, not too far above there, but around $55,000 if I remember correctly. But in this case, quarterly, when we have seen red candles on the quarterly in prior cycles, it has usually led to, at minimum, in the early days, it led to another quarter with a swing down from the 2011 high before marching on in that double pump era from 2011 to 2013. But first quarter kind of marked the actual high of the cycle. That first red candle that came in, we did see an attempt at a recovery and then a mean reversion over time. Same thing in 2018. We did see the same thing in 2021 as well. And, that's after putting in the actual highs. But what we haven't seen is the actual expansion on the quarterly. So this does point to a maturing asset over time that is loading up a very, very big move. And, what that looks like, we don't quite know just yet. But we can define criteria on the quarterly here. It's very, very simple. Close below last quarter's close at 76,702. We've either already hit $69,000 or will hit it, possibly coming down to, the 58 and under to the next high around that 46 to 47, basically threatening this higher low swing on the quarterly. I would expect, though, some sideways, to be quite honest, from the look of this as it stands right now, mainly because of the underlying fundamentals, for electrical cost post-halving, essentially, doubles in terms of Bitcoin dollar terms because of the rewards being halved for miners. So, we'll see what this holds. And of course, what holds true in terms of some of these statements. It would be a very rare thing for Bitcoin to get underneath electrical cost. And give me a moment here. We'll jump over to Caprioli. His chart for electrical cost is a little goofed up on his website. The site is fully white. So please, just be warned as we flip over here and have this load up. But his electrical cost mirrors, so it's about $54,000. It mirrors within the margin of error what we're seeing for miners as well, at least for my rigs, for electrical cost when calculating it in Bitcoin dollar terms per Bitcoin produced. Being around $54,000 is within the margin of error. We're actually a little bit above that for mine at around 56, I believe. Still, that could have updated though. But, that is going to adjust a little bit when we do see blocks mined and what the hash rate is and all that kind of stuff. And then compare that to, the PPAs or power plant agreements. Now, in this case, we should go and take a look at the monthly and see what's going on here. So we've had 2 monthly red closes. And I'll be quite honest with you. This now is in the volatility range that I had mentioned. I didn't necessarily want the bulls to be in if I'm bullish, right? But it's a big but, and I will not lie. If we do see a recovery above the upper first, then this could be seen as a deviation below the upper first standard deviation away from the basis band on the monthly, which is sitting at $65,000. So we've got the quarterly upper first at $69,000, the prior cycle highs, right in an important accumulation or reaccumulation zone for Bitcoin just below price action right now. And then for the monthly, we've got the basis band sitting at 65, which of course was the first high put in 2021. And essentially this means that the top side of this consolidation structure, especially on the weekly, is fair game. From a volatility standpoint. Now, if we do start seeing recoveries above the upper first standard deviation here at around $85,000 to $86,000, then it starts to look a little bit better for the bulls, especially trading above last month's high at 95. Now, of course, that's those twin tower candles that we saw coming in. So we'll take a look a little bit deeper at this one. But what would be interesting is we do see the potential for some further downside here, but it would be very easy for Bitcoin to recover this. And we'll dive a little bit deeper into this on the weekly. Now, what I will say is we are still seeing this bearish divergence play out. We are seeing price action now at the edge of the bullish control zone for RSI. But essentially, if things start to turn green, we've got some potential bullish divergence, maybe not on bullish divergence for the monthly here. And this would have to go one tick lower, I think. Yeah, we're not quite there while putting in a higher high close for continuation. Not seeing that just yet. If it did dip and close a little bit lower on the monthly, again, quarterly is I'm not concerned about it. If it closes below, if the monthly closes below the quarterly, last quarterly's low, it still has a chance to recover for the quarterly. But from the monthly standpoint, things can still dip down in a safe way, in my personal opinion, and test the the top side, whether it's on the monthly close open there and 71. I think I have marked 68 to 73.835 at that high of the prior accumulation for the high side. And you can even probably bring that down now to the basis band. You'll see that I have done so in some of my charting. But yeah, in fact, we'll update that in just a moment. Just, so we have some levels of interest down below if price does choose to head down. And as I've mentioned before, the daily pivot's still around $85,000. So from the monthly perspective, we also have, a Stoke divergence. This is a regular Stoke. The pivot is at 106. Let's take a look at the quarterly. What is the quarterly pivot? Quarterly pivot's at 93. So we are living below the quarterly pivot. That is a little concerning here, but there is still time to save it. We have the 2 month is already crossed down below 91. And the monthly is down below that 106. So if we were to come all the way down to a weekly, we can see the weeklies in the bearish control zone for regular Stoke. 91, just about 91,800 is going to be the pivot there. We do have the volatility picking up to the downside. We are now starting to see, what is this? No, I don't want this. We can turn that off. Wait, what the heck just happened here? I'm on the correct chart, right? All of my indicator set just reset and turned on. We don't need some of this stuff. So we don't need some of the upper second, upper third stuff. We don't need that right now. It's just kind of going to make things a little more complicated to explain. Although they are just visual aids for where price is closed on the bands. But in this case, we are now starting to see a little bit of expansion of the bands. The only way that I'd be looking for an actual expansive move to kick off into the top side of this range down here would be if we saw a closure below the lower second standard deviation at $80,000, which, Bitcoin did hit some of our initial downside targets between 80 and 82, that I was talking about on Friday. But in this case, a closure on the weekly below the lower second that also breaks down from this weekly low at 76,700 on the index here would start to paint the picture of coming down and testing the top side of this range, even if it just touches it on a wick. Let's go to the Coinbase chart. It's much cleaner, and the big boys are using this one. So those big asset under management institutions are typically custodying with Coinbase for the most part, and their APs are using them as well. So, or transferring to them. So this is going to be kind of where I'm going to, stay with referring to price action and its accuracy is on the Coinbase spot chart. And then if you are charting for a particular exchange that you're trading on, I suggest that you use that chart. But in this case, we want to get a general overview for where spot's going to be headed. And in this case, on the weekly, closes below 80K that take out subsequently either in one candle or two or more. As long as it's living below the lower second, that will threaten the low here. And I'd be looking for, the top side of this range to get hit. And you can take this low here. Now that we have essentially the basis band for the monthly, and let's go ahead and just reference that real quick at 65,300. That's where the basis band is. That lines up with this lower high that came in before putting in the higher low that led to the nice run up and expansion here on the weekly. So we can just kind of go like this and say this is fair game on any closes below 80,000 that take out that 76. I think 555 here on Coinbase spot. So kind of the whole top side structure, including the nice higher low move, is in play at that point. If we do see an actual expansive move down for the weekly, and in this case, that's all fair game in that area. And of course, you can go through it and you can mark, the highs if you want in here, and you can kind of get some checkpoints or zones of interest within it that might be helpful along the way, and then refine that along, as price heads down. Not really that relevant though when we're looking at the weekly. We're kind of looking at an expansive move that could, dip into this area. Again, I'd have to see closes below 80K that also get a close below. If you start to see like closes below 80K, the low's in play on the daily below the weekly time frame. But if we haven't already seen that hit, then it would be very likely. And then on the daily, any price action below there, we're looking 73.35 essentially to $60,000. You can refine for dailies in there for areas of interest, as you see fit. And I might even do that if I see a move down that threatens a low. And then, of course, if we haven't seen the low and lower hit on a weekly, then it's in play on closes below 80K. And to the upside, the lower first now is at $87,000. Which is a relevant daily level, but we need to see closes back above 88,800, which is just shy of this higher low swing, and close on the weekly through here that put in, led to this higher high swing, but lower high close. So this is painting more of a consolidation structure. And quite frankly, this could turn into like a nice bull flag, to be quite honest, especially if it can hold and run, maybe even run the low or swing the low or something like that. and then pop right back up. 91,800, of course, is going to be the weekly pivot. So that would be something that we can entertain as we go down the time frames here. But essentially, between the supports down here and then, of course, the weekly low that closed here, there is, some areas of interest just below price action, right? So we've got essentially 80,700 on the close open to the actual swing low thus far at that 76,555. And then we don't have necessarily a closing low. It's really if we see closes below essentially $81,000 that this would paint as another lower high with targets down to this low and lower into this wider range on the top side of that accumulation structure. That's what I'd be looking for next. Then, of course, 88,800, essentially $89,000 is higher low swing is where bulls want to see, is essentially what bulls want to see taken out on a close for the weekly. And above there, we've got, just under $95,000. We have the basis band for the weekly at 94K. So it's something to pay attention to there. And as we kind of get a little bit deeper down here into the daily, we're starting to see this expansion to compression for the daily here. And, weekly is not confirmed expansion to the downside just yet. We do see volatility picking up and the Bollinger Bands expanding down. Daily in this case, we moved from this really tight compression after going sideways with which seemed like forever around that, to the downside we had 93, to the upside we had 99.5, but essentially on the closes it was just going sideways around that 95 to 96K, kind of oscillating around it. Saw the big explosive move down. Bollinger Bands got really wide, so we had a really big uptick in volatility. We have that $95,000 Twin Tower set of candles there. Tried to higher low its way out, went right into daily resistance, right up against the low side of the structure here and the high side of this guy over here, and basically rejected to lower lows. Tried to crawl its way back up, hit primary resistance overhead, and has now pulled back. So expansion to compression. If we start to see closes below $80,000 on the daily, this would be daily expansion down to the lows. So, choose wisely in here. If you're bidding, you want to pay very close attention to the low side structures. It would be closes anywhere below $80,000 would be daily expansion to the downside, targeting the lows and possibly lower. Possibly lower. Doesn't mean it's going to go lower, but it is possible. And then you can say, there's the swing right here at 80K essentially right on the dot. And then you've got the 78.5, 78K, and then the actual low there by the swings at that 76,555. If we did see that, be aware of expansion below that just swings outside wherever that lands, whether it's just outside of this low here or hits the structure on the weeklies down there and the dailies in between there. And then popping back up above 76,555. Any kind of a strong buy back above there would be very, very interesting for myself. And then especially closing back above 80 would look really, really good, as kind of a counter trend trade if that did occur. Now, right off the daily here, I do want to note that if we do see a low put in on the daily above $84,000, funny enough, $84,000, again, is going to be right around the basis band. But if we see a low set on the daily, it's going to come in above $84,000. Preferably, you want to see it get a little bit further up on closes above 84,400 or so by the basis. That will cause some RSI divergence, and in this case, bullish divergence. Let's go ahead and take a look at that real quick here. And we've got... yes, that would put in some RSI divergence off of this low back here. So we would get some divergence on the daily if it did do that without heading down lower. And it would still preserve a chance for building bullish divergence for RSI. Let's take a look at a few things here on RSI for the daily. Bearish control zone, 80,250. So that's right at the edge of the bearish control zone. Where's the bear critical zone? That's all the way down here at 60K. So that's a little deep for a move without some moves further back up, but we'll see how this develops over time here. Yeah, man, it's downside stochastic momentum below 87 to 83. So, it is pointed to the downside. I'll be quite honest. I mean, price action kind of looks like garbage right now, to be quite honest, especially coming into a compression and the bearish half, but you got to give it a chance. Not until I see closes below 80K am I targeting those lows again. Now, you can get an edge in lower term timeframes than the daily, but dailies will confirm it for expansion down into the low and possibly lower. And then, of course, for right now, until we talk again on Wednesday, you want to see closes above 84, preferably like 84.5 above the basis band, and then take out this high at 88,800. Why do we want to see that high taken out? Well, let's go ahead and turn on the local support and resistance areas of interest, and we can see, and actually I'm going to refine this box on the week. I'm going to take this out to a weekly box because of where our basis band is on the monthly. We're going to bring this guy down to that 65 just to get the full breadth of that top side of that range for the actual highs that were put in. Let's go back to this daily here, to this mess of a chart. And what we see here is right below this overhead resistance, right at the most recent higher high, we have our 1.168 at 88,700. We saw the swing $100 above it, 88.8. That needs to be taken out. This red zone needs to be reclaimed. Above there, we've got 92K to the next swing high at 92.8. That's a number that's also come up on some of the longer time frames as well that we were just looking at in terms of pivots. And then it has to take out the weekly close open. Of course, contend with this weekly higher low swing at $89,000 right in this red zone. What is the 1.168? This is going to be the prior cycle's fib pull extension. So let's just go and redo this one because I do like to revisit this one often. If we were to pull a fib, and this is log scale, if we were to pull a fib from the prior cycle high at $69,000 to the spot low at 15.5 or so, we get the extensions above $69,000. I have a 1.168, which is 16.8% above that high at $69,000. Coming in at 88,700, we have the 1272, which has not been closed above, at 103,645. Now it has not been closed above on a monthly. Obviously, it has done that on a daily. We've got the upper third for the monthly here at the 1414 at $128,000, coming right in line there. So those are just important fib extensions, and I want to point this out because of just how clean Bitcoin has been playing around these areas on the daily, especially when in respect to that range overheads low. So if we go ahead and turn on the local support and resistance areas of interest, zoom in a bit here, and turn off the Bollinger Band set here. We don't really need to concentrate too much on that. Just know that we're in a compression, and above the 1618, we'll get expansion up further into this overhead resistance. Below 80K, we're looking for expansion down into the low side structure, possibly lower. So in this regard, for the macro fib extension, we see that we had a close open. So we had the big expansion of price action out of that prior accumulation zone down below into the 1.168 at that 88,700. We saw close open basically right on it on the daily, and this was also the first bearish close open. So the first bear candle post expansion put in its low right at $85,000, which has become a pretty key pivot here, breaking below it, finding resistance. After putting in the low, got above it, found it as support, dipped below, tried to hold it, lose it, find it as resistance, deviate, so on and so forth. So it is a pretty important daily metric for this first post-expansion bear candle low. And then we saw the close open come in right on that 1.168. This then subsequently formed a nice range. So we saw a higher low on the daily put in here as well. And then we saw another higher low on a close open put in here between essentially around 88,700. You can call it 89K to 92. This held up for quite a while, even got some nice dips into it. Once it finally got closed in, we saw price try to hold it and retest it and then break right down. So this zone of interest needs to be reclaimed by the bulls. That would be very good. And of course, that would put it above its most recent high or high. So you do want to see a low set that would come on some bullish divergence. And that would be on closes above 84K. Still needs to contend with 85. And then, of course, take out that high at 88.7. That would look good to test up further into this range. And then possibly try to gun for, the low side $95,000 area in this high up here, those twin tower candles that do absolutely need to be recovered, not just on the daily, but some higher term time frames to start making a difference for the bulls here. Otherwise, living below 85, bearish to the downside for tests. Above, 84 and then especially 85, bullish to come in and retest that overhead resistance for the daily here. And, is the potential in the cards there? For today's Tuesday candle, the pivot's going to be 87, 300. That'd be quite a nice move up for April 1st. But in this case, bulls just want to see it hold this low. Realistically, maybe go sideways with some indecision or something. And the 12-hour might be a leading indicator, but beware. Closes below $82,000 will blunt this possible momentum turn, and we still need to see a low set. And could there be some bullish divergence? There is. Is it enough right now, right at the edge of the bearish control zone? Maybe. We'll see. Again, closes above $84,000 would look really good even for the 12-hour to go and test further up. You start seeing closes above 85, then we got some progress for the bulls to at least go and retest. This was, a bearish retest and led to lower lows, so we need to see it dig itself out. For the 12-hour progress, look good above 83.5. I would still say it needs to take out 84. So that's kind of where I stand on that. Let's go back to the macro real quick here and just take a look at a few other things here that I mentioned on Friday, but if you didn't get a chance to watch it, we'll just cover real quick here. And I know these videos between Friday and today are kind of long, and I do apologize, but I think it's important to kind of understand the context for where things are, as it will, this is not painting the rosiest picture for price, but there's still a really good chance that this turns bullish very quickly because it's still on the table and we haven't seen a macro structure break just yet here. So one of the bigger things that I want to call out is this more recent 2017, fib pull and kind of where things topped out in 2021. And this was right at the 1618. If you're to take the bull market high of 2017 to the 18 low on log scale here, you'll see that, we ran right into that 1618 and did not really close above, did not get a close above. We saw a close at 61,350 or so, and it was at $62,000 for that 1618. One of the things that I want to draw your attention to about this, as we've seen, decreasing rate of returns over time in the context of that 3-month, it being in a compression still, is that we haven't, at minimum, I would almost expect, the 1272 would be a pretty shallow move. There's no structure break until we see closes below the last higher low at 49K. It does look as though if things were to play out with another higher low, that at minimum on a wick basis, I could see the 1414 getting hit. And maybe even the 1618 again, but, with decreasing rate of returns or, decreasing dispersion of returns when talking about volatility, then maybe it just kind of goes sideways and reaccumulates. I think that'd be incredibly bullish considering the demand for, a lowering amount of circulating supply. And this is Ethereum, but let me go to Bitcoin real quick here. if we were to take a look at the exchange reserves, while we've had some more come on post options roll last Friday, we're still like just exponentially just hemorrhaging reserves for exchanges at this point. And I'm not seeing the conditions just yet to call, this the top, and there is no structural change. This is still a bull market. So while there are concerns that the top could have been in, those are just concerns. They are not realities until we see some sort of a structural change, still in higher low structure, higher high structure. So while there is some risk on the table here that it could be over, even the quarterly, it's not giving me the vibes. It's not telling me what I need to see just yet. And that's, we're looking at index in this case. It's just not telling me what we want to see for this to be anything more than, even if things did head down and reaccumulate, it's just loading up the bazooka at that point for an even bigger blow off. Yeah, that's kind of where I'm going to end things. We're going to update this view throughout the rest of the week on Wednesday and then, of course, Friday. So join me for the check-in on Wednesday. We'll revisit this all on Friday, talk about what we want to see for the weekly close, and we will take a look at traditional markets, because if you're going to be concerned about anything, it's actually, like S&P, Dow, and NASDAQ, right? So that's where there's actually some signals that are firing off that are not bullish, let's put it that way. But Bitcoin remains in its bull market. It is still within its bull run area of interest. And we'll see how the rest of this quarter goes. It's 3 months, it's a long time. So strap in, be prepared, and I'll talk to you on Wednesday. Have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Take care.